This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr. and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Got my camera on. I ain't got my camera on. How am I here in these video streets and I ain't even got my camera turned on? You mean tell me it's been that long? It's been that long since we did this? I done forgot to turn my camera on. Good evening, everybody. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome, but want to give you a nice hearty but thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Araña Grande. Y'all see it behind me. That just means big spot if you don't hablo español. And you're in tune to another episode. We ain't did this in a while. You're in tune to another episode of the Intraday Price Action Recap. We had one of these in a minute, man. It's been a minute since we did this right here. Hey, man, y'all come on up in here. Y'all pull up. It's been a minute since we did this because we was doing Facilitation February. Y'all give yourself a round of applause, you know what I'm saying, for pulling up for Facilitation February. Shout out all the people in Zoom who can't hear that right now, because I'm not sharing my sound over there in Zoom. let me set it up so I can share my sound in Zoom. For all those in Zoom, man, give yourself a round of applause. You know what I'm saying, for putting up all February long. You know what I'm saying? It's February longish. You know, the beginning of February. You know, we ain't. You know how it is. Things going on. Getting a new setup. Speaking of the new setup. Oh man. Did y'all see in the Discord where I shared the latest edit? I just been making little tweaks and all of that right there to my setup, a little bit at a time. Did y'all see where I shared the new picture? My latest addition to the setup. Let me come over here. First of all, let me share this with get out the way, Zoom. Out of my way. All right, let me share this with the people. All right, if you look over here, this right here, this is the setup, the new setup I got the lights off in the room so you can see the glow of the, you know what I'm saying. I don't keep all the lights on all the time. I just, you know, so I had it on right there to take the pictures. It's crazy because I went through all that, running all these lights and everything, and I never turn the lights on because it's all. I never turn the lights on. I just want the lights on like that, and then I made a few tweaks to the inside of the computer. I had showed y'all the computer once before. I can't remember what I thought I showed y'all. Oh, you know what? That was just like a little tour. That was like a little tour when I was I had my camera on when I showed y'all the inside of the computer. So y'all don't know what the inside looked like before. But now I made some updates to the inside, and so this is what the inside of it looked like now, right? What I changed was I changed like this cable here that was black, right? This right here, this cable here was black. It was coming out of this grommet and running up there. It was black. This cable right here was like a cable like this, but it was black. I changed it to that single cable with RGB around it. Then that cable right there and that cable right there, that was black. So I changed all the cables to white, right? And then I added my dog T'Challa inside there. I put the whole, you know what I'm saying, with the whole uniform on. It's like the Captain America version. And then this is I think this might be Wakanda Forever. I don't know, it's not Wakanda Forever, but this, you know, him without the helmet. You got the helmet on. So I added him inside there. Right. So that's the last. I don't think I'm gonna do nothing else. I don't think I'm gonna do no other. My son girlfriend was like, "Are you gonna decorate some more?" I said, "Nah, I think that's it. I think I'm done now." Right. I called mine the panda. Right. I called mine the panda because it was white and black. Right. My son called his the ghost. I should have called mine the ghost because mine like got the all white theme. But you know what I'm saying, since the panda, I went with I put the black T'Challas in there to keep the black and white along with the black motherboard. So I got a black motherboard, the black T'Challas, and then everything else is white. Right? So that's the new setup, man. And it's my first time having an AMD system. I usually run an Intel system, right? So I got an AMD Radeon GPU, right? See right there on top, say AMD. I got an AMD processor in here, right? So it's a full AMD system. My first time ever buying an AMD system. I feel like I'm betraying somebody by having this AMD system. I promise you I do. And I don't know if it's Windows 11 or the AMD system, but I've been having so many hiccups ever since I got this new. I think it's Windows 11. I really think it's Windows 11. I don't think it got nothing to do with the AMD, but I don't know. I'm skeptical. Anyway, now that I've separated the wheat from the tare, man, we ain't come on here to listen to this guy talk about his system. We came on here to have the intraday price action recap. Hey man, like I say, intraday price action recap is back. I've decided I might still be fine tuning because I ain't got it down concrete yet. I ain't got no outlines laid out yet, but I announced it to the gang before, where the intraday price action recap, I'm gonna do it like in a more scripted format, where I got like a format that I go through. Because what I intend to do is to make like splice it up and then post video segments from the live stream as just pre-recorded videos for people who can't make the live stream, don't want to sit through the whole live stream, and when you come back they don't want to try to figure out, hey, what did he talk about in that live stream. So plan on chopping it up into different segments and posting it just as videos on the channel, so that you will know, okay, this is what this is about, instead of going back and be like, man, what did he talk about on March the 2nd for the price action recap. Then you can see, oh, this is a breakdown, this is a breakdown of that. All right. Zoom, can y'all hear me okay? Cause y'all the other day y'all was complaining about my voice was going in and out, in and out. Right now it looked like my voice is loud, looked like it might be a little bit too loud, but can y'all hear me okay? And I don't hear y'all, so that must mean my audio is not set again. Like I say, I don't know if it's nose peeling. I don't know if it's a Windows 11 thing or if it's a new system thing, but let me see. Is anybody trying to talk right now? Oh, I heard somebody that time. Okay. Nobody just wasn't talking. All right. I see how it is. Trying to put some lotion on my face. My nose is all dry. Ain't nobody told me my nose was dry. That right there, that dry spot don't never go away. All right. Okay. All right, man. Let's go ahead and get to it. First of all, let me open up my trading view, and then we can get to it. How y'all doing today, man? I ain't heard from y'all in the month of Sundays. Who we got up in here? Let me see who we got up in here. Anybody do any trading today? Did anybody do any trading today? Did anybody get their head bust to the white meat? Or did anybody, take advantage of what the price laid in front of them? Did anybody take advantage of what the price laid in front of them?
I took a few trades in the morning session.
Okay, then. Got a few trades in the morning session. What time in the morning session, cowboy? Look here at the open. That thing took off. And then from about, I want to say like about 10 o'clock up until like almost lunchtime, that thing was just like in a 100-point range, just back and forth, back and forth, back and forth. Thing was in a 100-point range. We got Steve in here. We got Jim in here. We got Deborah sneaking in at work. I see Seahawk in here. I see Hitler and Shell in here. I see Shatter in here. I see Honey. I see Kim up in here.
Wouldn't that my bad, Tim, I didn't mean to interrupt you. Wouldn't that morning session, wouldn't that have been like a bullish Judas swing?
The morning session?
Yeah, the 9:30 session.
You talking about right at 9:30?
Yeah, like the first 30 minutes, hour of the market.
Oh man, right at 9:30, that thing just went straight up. Like cause by the time I got to the computer, like, cause I overslept. Well, actually, I woke up at like 5, then I fell asleep, and I had my alarm. I had my clock set wrong cause the power went out here yesterday, and I had it set. Yesterday, I set it to AM when I should have set it to PM. So this morning, of course, it was set to PM, and my alarm didn't go off to wake me up. And so when I woke up, it was almost time for my son to be in school right then. So by the time I got back, I just saw that thing had went 90 miles an hour to the north. So I wasn't there right at the open, but just looking at like the 15-minute chart, when I did get back, it just went straight up.
You're right. It didn't take out any sell side before.
Yeah, like after 9:30, it just went set. Now I did take out some sell side prior to 9:30, but like once 9:30 open on like the 15-minute chart, nothing could stop me. I'm all the way up. That thing just went straight up, straight up. What's up, Royce? Got Royce up in here. Hey, all right, got my trading view open. Let me go ahead and share my screen. We gonna go ahead and get into it. Let me share my screen. Jump over here on the charty tarts. Y'all do me a favor and hit a like for the algorithm. And if you're not subscribed to the channel, you know what to do, right? So what we gonna do? We're gonna start out the new format for the price action recap, like this is just the basis of it. We're gonna start out. We're gonna look at the Asian, the London, and the New York. And when we look at the Asian, London, and New York, we're gonna look at them individually, and then we're gonna look at them in totality to see if they work together throughout that day to create a narrative on the day. Right? That's just the concrete, or that's the foundation of the new format. Look at the Asian, the London, then the New York, and then after we look at the Asian, London, and New York, then how did they all work together as a whole on the day? Did it create an overall narrative of the day? Okay? Right? And then as we go along through the week, we're going to look at how is Monday, Tuesday, Wednesday, Thursday, and Friday work. Like on Friday, we're going to look to see how did they all work together to create a narrative for the whole week. All right? So getting into it, we're going to start off with our Asian session. All right? So what I'm going to do, I'm going to go here to my sessions so we can look at it real quick. We're going to go Tokyo, London, and New York. So Tokyo, we're just going to go from 1800. And we're going to run it up to, what did we say the Asian close was? Was it 2 or 2:30? Y'all remember what we said it was when we looked it up? Who remember what it was when we looked it up? Like the entire session. Was it 2 or 2:30 when we looked it up? Let's go look it up again. What are the Asian stock market hours? We looked this up before and I don't be remembering it. Sorry, y'all. From 9 a.m. to 3 p.m. Right? And then you got Hong Kong, like, so Tokyo is 9 a.m. to 3 p.m. Hong Kong is 9:30 to 4 p.m. And then Shanghai is to 3 p.m. All right. So 4 is the latest. All right, so we're gonna go with to 4. So we're going from 9 to 4 because the earliest one, right there, major stock are generally between 9 and 4. It put it right there at the top. If I just read it at the top, it would have been there. So now we're going to go to time is. Right, we're going to go to time is, and then we hey, saying what I want. I want to compare. I want the regular screen. I want the regular screen. What's that regular? I want the regular screen. The one when they have both of them up there, so I ain't got to worry about countdown, daylight, calendar. Where's the compare? Where's the compare? Compare. Oh my goodness. I'm going crazy, y'all. See, there it is right there. Okay. Oh my goodness. Right here, this right here. Why couldn't I see compare when I was looking in there? Did I miss something? Time here and there. Why y'all ain't tell me it was right there? Time here and there. Man. All right. So it said from 9 until 4. All right. So that's 3. Okay. So 9 to 4, and then see 1900 is 7 o'clock. Oh, 8 o'clock. Right there. So that's right. So 9 to 4. So 8 o'clock to 3 o'clock. All right. Because that's when the Asian start. 8 o'clock. Yep. So that's right. So 8 o'clock to 3 o'clock. So since the Sydney start at 6, then I'm just going to put it for 6 o'clock. So 6 to 3. All right. 0, 3. Right. Then the London. Right. We're going to go from 3 up until, you know what? I'm going to just run it from 6 up until 1:30. That's what I'm going to do. I'm going to do 6 to 1:30, right? And then I'm going to go from 1:30 to, how I want to do it. I do 1:30 to 7, right? Because that's when the pre-market start, and then I do 7 to 1600. Okay, boom. There you go. All right. So we got 6 until 1:30. It's gonna be our Asian time. Then 1:30 up until 7, right? Because this is incorporating the Sydney also, because the Asian don't start until 8 o'clock, right? But it's incorporating the Sydney also. Okay, then this is our London time from there, and this is our New York time there. So now that we got our times there, you know what would have been easier? Instead of doing like instead of doing the what you call these things? Indicator. Instead of doing the indicator, right? I could have just came here and made a box. I could just came here and made a box. And that would have that would have made it a lot simpler. That would have made it a lot simpler. All right. Then we go here from 1:30 to 7. And we're gonna name that the London. Yeah, this would have been a whole lot simpler than trying to figure out that. And that way, I over here to 4. And that way I don't have to keep that okay. And then now, all right. As a matter of fact, I could just make these the same colors that they are there. All right. And then I can we're gonna go recap. Asian. I can make these templates so that next time I come back in here, I ain't got the recap London. Now bear with me, man. We getting, you know what I'm saying? We getting it together. Now from here on out, it's gonna be smooth as a baby's bottom. You hear me? Now, I can turn this off like that. And now we got our sessions broke down. And then now, when we get ready to do it tomorrow, all I got to do is come here, right? Select. Like right now, if I draw that out, see how it draws that color there, right? Because that's the last thing I left it on. But if I go in there and select it now, and I come here and hit kill zone recap Asian. Now it's got the name up there automatically, and it's the right color. All right, for those who don't know how to save templates. Okie dokie. All right, so now it's new week. So this is a new week and a new month. Right, let's go up. Let's go up. Let's go up. Let's go up to the monthly time frame. Let's go up. Wait a minute. Let me go back in here. Let me go down to the 6 minutes. I'm gonna go to 15 minutes. All right. This current layer in blue. That current layer in blue. That current layer in blue. Now let's go up. Go up to a monthly time frame. All right. When I did like a quick little chart prep when I was talking to the gang last night on the monthly Q&A, and we talked about price on the higher time frame of the monthly. We were very extended. We had been running for quite a few months. 1, 2, 3, 4, 5, 6, 7. We ran up for 7 months. Then after that, we've just been in this range. We've been inside the range of November's candle. We have not traded outside the range of November 2025 candle. Cheese and rice, right? So we've just been up here engineering liquidity. We've been slowly pulling back, but we're not showing the willingness to break down or take off. So we've just been engineering liquidity on this monthly time frame. Okay. All right. So we took out October's low, but then we had an inside month to November. We took out December's high, but it still was an inside month to November. Then we took out January's low, but it still was an inside month to November. And now here we go. We're starting with March. Okay. So looking at what we've done since we came up here and made this high, right? We came down, took out a monthly low, traded back up, created relative equal highs, right? Traded back down, manipulated out some internal sell side, right? Left the low, and now here we are here, right? So we got relative equal lows, relative equal highs, and we're still here engineering liquidity, and we're down here in the discount of this range that we've been consolidating in. All right. When we go and look at what we've done since we left this area here, right? So we come from the highest high, and then we come down to that low right there. All right. We came up, pulled back down to a discount, right? Traded back up, hung out in the premium for 1-2 more months when we set those relative equal highs. Then we dropped back down into a discount and left the low, right? Left the low. And now here we are. We opened up and we've moved down into a discount. And so we're watching this discount wick on a monthly basis, right? We want to see how does price react to this wick on a monthly basis. Why? Because that's a discount PD array for the range that we're in, and we're in bullish in a buy program. All right, we have a fair value gap way down here at the breaking structure. Okay, so if price got really heavy, right, and looked like it want to put in a ridiculous retracement, we do have a fair value gap down here at the breaking structure. But we have a monthly volume imbalance resting right down here for the month of September, right? So we do have a volume imbalance here, okay, that you can monitor if price decided it wanted to engage this low, right? So you have a discount PD array that you can eyeball to say how does price react here on the monthly basis, because that's a discount PD array in the latest expansion leg of our dealing range. Okay, now got a visual of where we are, higher time frame. All right, looking at our weekly time frame, as you can see, as we stated on the monthly time frame, since we came up here with this expansion up, we've been here engineering liquidity, right? It's you can see a little more detail on that weekly chart than you could on the monthly. When you looked at it on the month, you're like, Tim, I kind of see what you're saying, man, but I just see candle by candle, man. I feel you. So you see here, right? Consolidate in there, left that area. Once we left that area, balanced price range, BPR, right? Now, don't forget, this is our low and our high on the monthly time frame. That's our latest expansion leg. All right. So as we were creating this latest expansion leg on the monthly time frame, the weekly time frame left this area, balance price, price range, right? Don't want to see price coming back down here, right? Come up here, left that area, balance price range. Don't want to see price coming back down there, right? So we expand away, right? This is our range as we're leaving this area right there, right? This is when we start to leave the area. Okay, we retrace back down into a discount into the suspension block right here, right? Hit the suspension block, went back up, right? Now, remember, this is our balanced price range, right? We've extended all the way up there, right? So now, watching, you have this price leg, right? But we got a swing low here, which is internal liquidity to that area there, right? So you'll be looking for opportunity to trade in the latest expansion, right? And in this case, price dug a little deeper and it manipulated sell side prior to pushing back up. So we had a retracement, right? We came down, respect the order block, came down, respect the order block, and then we came down and swept the liquidity, right? Closing below mean threshold of the order block, manipulated the liquidity. Once we manipulated the liquidity, right, we traded back up, but we failed to take out that high, right? Once we failed to take out that high, just consolidate and engineer liquidity, right? And then once we consolidated there for many, many weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, we popped up, manipulated out the buy side, but did not take out the all-time high, and then rejected off, right? So when we reject off, right, we're looking at the low that sent us there. So we came all the way back down, but did not take the low out. Created relative equal lows. So now we got relative equal lows and we got relative equal highs, right? And we're still engineering liquidity. So when you're engineering liquidity and you've created relative equal lows and created relative equal highs, can somebody tell me which direction we going? Which way we going? Anybody? It can be Zoom, it can be YouTube. Which direction are we going when you create relative equal highs, relative equal lows in the midst of a consolidation? Which direction are we going? Tell me. I can't hear anybody. Gotta wait. There you go, here to learn and share. Gotta wait. We don't know which way we're going. You hear me? Right? Very good. So we're just up here engineering liquidity on the weekly time frame, and we're monitoring this. This is the weekly. This is the monthly wick that's graded here. Monitoring that monthly wick. Okay. So we want to see how price closes at the end of February in accordance with that wick. Right, Tim? Why that wick? Because that's the first imbalance in your 20-day look back, right? Not your 20-day look back, but in the short term. I'm sorry. That's your first imbalance on the monthly time frame, and as you look back, right? When you look back, this is in the world. When you look back, here we go. Here we go. Let me go over here and see what somebody's saying. Why my system this ain't happening forever. This ain't happening forever. Wouldn't you say we are going down because the break in market structure to the downside? Breaking market structure on what time frame? Breaking market structure on what time frame? Watch everything I just did be lost. Okay, maybe not. Breaking market structure, the weekly time frame. Let's go to the weekly time frame. All right. Technically on the weekly time frame, we don't have a break in market structure yet. There's no break in market structure on the weekly time frame, right? And why do I say that? For me, there's no break in market structure on the weekly time frame for me, right? Because, like we said, we established a balanced price range, right? We came up, we came down, right? Manipulated out internal liquidity, right? So this right here, from that high to that low, that's your latest expansion leg right there for the weekly time frame, right? We zoom out, we look, right? This is our latest expansion leg. We come down, we manipulate out internal sell side, right? This is internal sell side liquidity that we took out right there. Right? Come up, come down, took our internal sell side liquidity. Where's our dealing range? Our dealing range is here. Okay? All right? So then we come back up inside this consolidation, but if we ignore all of this time distortion, right? Price came up, came down, manipulated out sell side, came up, came down. There's no break in structure in here, Right? We're still inside this area of consolidation. All right. The breaking structure would be here. This would be the breaking market structure. Right? Because we come up, right? We come down, right? This coming up, coming down there. This right here, right? We broke out of this structure to the downside, right? And then we came back up, right? And pushed through this structure we formed over there. We had a breaking market structure to the upside. All right. Then we formed another area of structure inside this consolidation right there, right? But all of this is just, right, a part of this expansion right there. All right. Then once we got this balanced price range right there, now this is the structure. This is the dealing range that the algorithm is working inside. Okay. So only thing we did was come back down, take out internal liquidity inside our dealing range, trade it back up to a premium, took out buy side liquidity, internal buy side liquidity inside our dealing range, then come back down and set relative equal lows inside our dealing range. So there's still no bearish breaking market structure there yet. Are we in a sell program right here? Yes, we are in a sell program there, right? Price in from the week of January 26th up until now, price has been respecting bearish order flow, right? We've been respecting bearish order flow, but we still don't have a bearish breaking market structure, right? Because we're just still trading. Matter of fact, because even if you look at this bearish dealing range right here, right? Even if you look at this bearish dealing range, when we came down and took out that low, right? Right, when we came down and took out that low right there, only thing we did, right, we are trading in, we just came down and took out internal liquidity, right? We just went up, retraced back down, took out internal liquidity, and then went back up right there, right? We're still inside our dealing range because now this is our dealing range. So now this is internal liquidity inside our dealing range. So price can realistically come all the way down here and sweep these lows just to go higher because we're still inside of a buy program, right? So, but if we take that low, yes, that would be a bearish breaking market structure on the weekly. And what you would want to do at that time, right, is identify, okay, if we take out this low right here on the weekly, right, does monthly have a reason to come below here, right? This is what you want to ask yourself. So then you mark out that low, right? And you say, okay, if I come down here and I get this bearish breaking market structure, I want to go to my monthly time. I want to go to my monthly time frame and say, hey, does the monthly have a reason to come down there? And we look and say, yes, the monthly does have a reason to come down here. So that bearish breaking market structure is allowable for this time frame without invalidating the bullishness, right? That taking out that low is allowable without taking out the bullishness of this time frame. Because when we look from the highest high to the lowest low of our entire dealing range, right, this fair value gap, right, if you come all the way to the bottom of it, it's just bringing you back to fair value of the entire dealing range, right? And if we go to the low of our latest expansion leg, it comes down. If you get an institutional order flow entry drill, just eyeballing this, that looks like it brings you back to that lower quadrant on our latest expansion of our monthly dealing range. And let's go in there and put that in the 4th grade and see if that calibrated eye is working good. Quads. Look at that. That boy calibrated eye still working good. That's your lower quadrant right there. Right? Just a little lower than that lower quadrant. Right? That's your lower quadrant right there on the monthly time frame. So that breaking market structure on the weekly is not unheard of, because the monthly has a reason that it can come down there without invalidating the bullishness on the monthly time frame. All right. It looked like February 9th and February 23rd tap a breaker block in I don't look for breaker blocks inside consolidation. I look for them if we're consolidating on a higher time frame. I go down in time frames to look for PD arrays. Like, I don't look like inside this right here. I don't look for PD arrays in that, right? If we're consolidating like that on a monthly, right? Then if we're looking like this right here on the weekly, I'm not even looking for nothing like this right here inside the weekly. The only time I'll look for something like this inside the weekly is if price got animated below that, and I will be, if price got animated down, then I'll be looking at this right here as a mitigation block, right? Because I was looking at it as here, 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 right? I would just ignore all of that, right? We got heavy movement there, heavy movement there, heavy movement there, right? But then if you go down to a daily time frame, now I can look inside here for PD arrays, right? I can look inside this for PD arrays, right? Bearish breakers, bearish order blocks here, right? Fair value gaps here, bearish breakers, like in the case of that, right? Breaker right there, right? Because I'm ignoring all of this right here. I'm just looking at this right here as a move like that. And then in the case of this consolidation, ignoring that, and I'm just looking at that as a move. That's why I'm looking at a bearish breaker there, right? If you really want to get technical, you can look at this as a mitigation block with a breaker inside of it, right? If you want to look at it like that. But me, right, I'm looking at it as one whole move because we're consolidating inside there. All right. I'm not looking for like a whole bunch of PD arrays inside the consolidation. I'm just looking at this as engineering liquidity, and I'm focusing on when the liquidity gets swept. Right? What makes you choose the September 2nd candle on the weekly and not the November candle on the breaking market structure? You said September 2nd. This right here, that candle right there, and not the November 17th. This here, oh, what made me choose this and not this? Because this is the internal liquidity, right? This right here is the internal liquidity, right? This low right here did not go up and make a new high, right? This is just all of this is inside our dealing range, right? This is the dealing range that we're dealing inside right here, from that high to that low, right? Everything from here up into there is inside of this dealing range. So for me to get a breaking structure, I need to break the structure that I'm inside. You know what I'm saying? I'm not breaking out. I'm not breaking out to the top. I'm not breaking out to the bottom, right? My dealing range is my structure that I'm looking to trade inside, right? So if I'm not breaking out of that dealing range, right, then it's not a break. That's why I say for me, it's not a breaking structure, because I can come all the way down and sweep this, right? I can come all the way down and sweep this low and still go higher because all I did was come back into a discount of my dealing range, right? All I did was pull back to a discount, sweep, manipulate this low, and then went back up, right? And that's where you would place your fibs, right, to the high and and that right there. That right there will be, if you're looking at the weekly time frame and you're looking for like the overall dealing range, right? If you're looking for the overall dealing range, right, this is your overall dealing range that you're in right now on the weekly time frame, right? And why is that? Because we came up, right, dropped down, traded back up, right, and then once we create this balanced price range, right, we consolidated here and then took off, right? And when we leave that area, right, just like when we left this area, that became a balanced price range. When we leave this area, that becomes a balanced price range. So now from here to here is the latest expansion of this overall dealing range right there. All right. And you look to take your trading opportunities inside the latest expansion leg of your overall dealing range. So right now, this is our dealing range that we're looking at taking trades in on the weekly time frame, right? This is the lowest low, this is the highest high, right? And then you for those who don't know, right, when you get your lowest low and your highest high, in this case it's a bullish dealing range, right? You want to look at it in the sense of, right, I'm anchoring it and I'm looking for my trading opportunities, right, from this point in time, once I make the high forward. And where am I looking to trade at? I'm looking at the bus stops, the upper quadrant, the equilibrium, and the lower quadrant. This is where the algorithm is going to create high probability trade setups, right, at these quadrants. It's going to create high probability trade setups at these quadrants, okay? And then the bulk of your trading opportunities is going to reside in between the upper quadrant and the lower quadrant, right? That's how the algorithm performs. That's how it works, okay? But Tim, what do you mean by that, right? If you're inside this range, right, and you see the algorithm is not showing a willingness to really push above that upper quadrant, right, then you can look for price to go start to revisit there and maybe even revisit there, right? And if it doesn't show a willingness to get below that lower quadrant, then you can look for price to revisit there and maybe even revisit there, right? But once price starts showing a willingness to get below that lower quadrant, you look at the low of the range, right? When it gets above that upper quadrant with some authority, you start looking at the top of the range, because once it gets to an extreme premium, right, then it's most likely going to continue out. Once it gets to an extreme discount, then it's most likely going to continue out. But like I say, it can still come, sweep this, and still go back up, right? But until it comes and sweeps this and stops showing the willingness to go back up, then you can start looking for the low of the range. Keeping in mind that the monthly does have a reason to come down here, right? It does have a reason to come down here, and that right there, that sell side, can be manipulated to go back up, right? And that's fractal. You're welcome. That's fractal. That's on all time frames. It don't matter what time frame is on. Everything we just said, it's on all time frame. Whatever your dealing range is, you put it in the 4th grade, you can put it in the 8th grade, whatever grade you want to put it in, it all works the same. All right. I can't even remember where we was at, but we went down a rabbit hole. I'll probably clip that up and figure out what to name it. You know what I'm saying? Figure out what to name it. How long I've been on here so I know when to stop that. I ain't got no time. Where's my time? Do I got a time on Zoom? I could have swore I used to have like a time on YouTube. It'd be showing me how long I've been on here. Why did I see a squirrel or something just now? Oh, that's my background. Oh man, that's gonna drive me crazy. That's gonna drive me crazy. I don't 6:57. Okay, just say about an hour. What's up?
Sorry to interrupt. We about to go get some food. She finna get Popeyes. I'm gonna get Chipotle.
Y'all going to Popeyes and Chipotle? All right, that sounds good. What y'all treating?
You wanna? Oh,
Y'all treat you treat?
Am I treating?
I saw you peeking over him.
Because I knew as soon as you said, that sounds good, I knew you were going to ask, what is it, a 2-piece dark meat?
No.
White meat?
He don't like dark meat.
Okay, I know you asked for 2-piece something.
You say I usually get 3 piece. What y'all going to? You say you going to Chipotle?
I don't eat Popeyes.
You don't eat Popeye? I thought you was back on the chicken.
Yeah, but I'm not. It usually be like.
Popeye's pushing it.
Popeye's pushing it. Popeyes made me mad yesterday.
The one that's over here?
Cause they didn't make my food spicy. They didn't make my food spicy, so they made me mad.
Well, I'm getting spicy.
Yeah, get out the water for me. Yeah, y'all, it's on me. Whatever y'all want to get, you can get. I get me a 3-piece white meat with red beans and rice with a Coke.
3-piece like your usual.
Yeah, that's my that's my usual. 3-piece white spicy, 3-piece white meat spicy with.
Make sure it's spicy.
Yeah, tell them please make it spicy, and then whatever you're gonna get from Chipotle. You got the login?
Well, I set the order. I was gonna send it on the app, but
Yeah, like my regular login, trying to get them points off it.
yeah, 1,400. Is that it?
Yeah, that's it. That's the account. Yeah, that's what I like to do. You got the login on there.
Okay.
Yeah.
3-piece spicy white meat.
Red beans and rice with a Coke.
Yeah, I got you.
Yeah. I'll text it to you.
All right. Well, I know what my Popeye was.
Y'all finished with video?
Yeah, we finished it.
Yeah, that was so...
You want in there cooking?
She was cooking some.
She was.
It
Ah!
might be a little burnt, but we'll see.
Okay then.
We'll see what the viewers...
It can't be no worse than his makeup.
Oh, yeah, it's definitely not that bad.
All right. Oh, I thought I muted y'all. Y'all wasn't even on mute. I'm sorry, y'all. Y'all had to listen to me go through it. I thought I reached up and I thought I touched the mic, but I guess I didn't. Because all I got to do is just touch the mic. I don't have to hit a button. But anyway, y'all will be all right. I can't remember where we was at. But that's where we are in time. Looking at the daily still ugly too, right? So based off our range that we were talking about, as you can see, once we put our range on there, right, we are still in the middle of the road. We still in the middle of the road, right? We're in the middle of the road. Price is not giving us any indication that it's ready to just blast off in any direction. Okay, right now, in the short term, we are respecting bearish order flow. Remember we said in the short term we was in a sell program when we looked at it on a weekly time frame, right? Looking at our daily time frame. In the short term, we're in bearish order flow, right? If we take our tool here, starting at today, and stretch it out 20 days, right? 20 days right there. So 20 days back, this is our highest high and our lowest low. That's our monthly range. That's the range of the month, right? That's our highest high and our lowest low 20 days back, right? Personally, since we're just a stone's throw away from that high right there, right? I don't see no problem just using that because that's the dealing range we're in, right? Price came up, took out buy side liquidity. Price came down, right? Took out sell side liquidity right here, right? We did not take out that one. So when you take liquidity on both sides, that gives you a dealing range. All right. So now if we refine our dealing range down to the daily time frame, on the weekly, we're in the middle of the road, but on the daily, we're in a discount, right? We're in a deep discount. Now, if you recall, do you recall the most famous reindeer of all, right? If you recall, what do we say inside your 20-day look back? You want to look for daily PD arrays that reside at the quadrants. Those the first ones you want to key in on. Why? Those are your high probability ones where you're going to expect some type of reaction from price when they get there, right? And then when you focus on those, if there's any other ones that's there that's not resting near a quadrant, then you can pay attention to those. But most of the time, the algorithm is going to create them at those bus stops. Hear me? Okay? And we had already pointed out the order block. But Tim, we still haven't traded above that high and got that change in the state delivery. So why are you calling that an order block? I'm glad you asked that question, little Timmy Rogers. Because we came down and swept sell side liquidity, right? This is the last down close candle when we went into sweeping that liquidity. So since we're in a overall bullish order flow, when we move back down to a discount, right? When we move back down to a discount and then we have a reaction like this right here, okay, we've come down to a rejection block, a discount anticipatory reactionary point, and we get that reaction like that. I'm watching this as a potential bullish order block for the lower time frames to utilize, right? Because I'm anticipating this becoming a bullish order block in the future. Okay, so I'm looking at this down close candle as a potential bullish order block, right? And it's in line with that quadrant. We're looking at this suspension block, this bearish suspension block, because it's in line with that quadrant, right? Then we got a bearish order block here in line with that quadrant. And then we also have a bearish breaker there. Okay, now it's outside of this leg, but you create breakers, right? The breaker is never inside the dealing range that you're looking at. The breaker is created by that expansion. Okay, so we got a bearish breaker there in conjunction with that. So those are your PD arrays you're looking back through. This is moving into your 40-day, right? But those are your PD arrays that you're looking back through. Okay, which ones do you want to see the reaction off of first? The ones that you come to first. Okay, so as we come, we started trading back up, right? We made our low and we started coming back up. So you're watching this bearish suspension block, right? We hit the suspension block, right? Trade all the way up above the high of it. Then we immediately drop back down into our potential order block that we're watching, right? Respecting mean threshold, right? Then we come over here, we close roughly around mean threshold right there at that lower quadrant. We drop down lower, fail to get to the rejection block, right? And we close right there around mean threshold in that lower quadrant, right? We trade back up into this fair value gap, right? Closing, still respecting mean threshold in that lower quadrant. We're just consolidating right here at that mean threshold in that lower quadrant, right? Get a nice little displaced up, right? took out that buy side liquidity, and then immediately rejected it, right? So when we expand and take out liquidity but immediately reject it, what do we look for? We look for the low that sent us there, right? Now you have a swing low here that took you up when we left this area, right? That right there would be your bullish order block, right? Because we're consolidating and then we take off. That's our bullish order block. Now, in the sense of expansion, this right here is your bullish order block, right? Because we expanded down, then we expanded up, getting a change in the state of delivery, right? That's your bullish order block, right? Where is that residing? All of it is residing inside this future potential bullish order block. Okay, so right now, right, we're in a sale program here, but we're down here in the discount, right? We're down here in the discount, and this bearish PD array, right, that's right there at equilibrium, fair value, and into a slight premium, is failing to send us lower, right? That PD array's job is to send us lower, but it didn't do that. Stopped. Created relative equal lows, right? We traded back up, swept the liquidity, right? Rejected off, came back down, took out the low that sent us there, but didn't take out that low, right? So now, as you see, it's like we are respecting that lower quadrant and respecting that mean threshold, right? Tim, how do you say that? Because if you look at the bodies, right, these bodies here closing roughly at mean threshold, right? Just eyeballing it, but we're gonna look at it, right? Closing roughly at mean threshold, right there, right? Closing roughly at mean threshold and or above, right? Every candle is closing roughly at mean threshold or above, and then until we get here. Now, nope, that's still above. I'm tweaking, right? Because we came down, hit it, we opened below it, but we closed above. Okay, right? Every candle is respecting mean threshold of the bullish order block that we pointed out whenever that was. When I can't remember when we talked about it. When we talked about that order block right there. All right. So right now we're respecting that order block, right? And not showing a willingness to continue down, right? This suspension block has not pushed us outside of this area yet. The breaker has not, the suspension block has not, the bearish order block has not, right? The bearish propulsion block has not. Nothing here has sent us outside and extended the bearish dealing range, right? Every time we come back up to a premium, price stops and moves back to a premium. Okay, so right now we're not showing a willingness to want to continue lower. We're just engineering liquidity down here in the discount of this area. Okay, all right, so we're in the discount of our dealing range. Where do you sell? You sell in the premium, right? So it's respecting bearish order flow. I mean, we're in a sale program in the short term, but we're in the discount and we're not showing a willingness to expand further. Okay? Y'all hold on for a second. Oh my God. Jesus Christ. Just give me some macaroni. All right. This right here just we just all over the place tonight. we just all over the place tonight. Tonight we just gonna analyze price from the top down and we gonna call it. Cause we done been on here a long time and we ain't even got to the price action recap. All right. Not willing to push price down. Right. We're just hovering here inside this area of consolidation, right? So we already know whenever you're looking at a range, right, this is our overall range, okay? And we keep coming back up and butting up against this balanced price range right there, right? When price is truly bearish, you want to see the balanced price range be used as resistance and continue down. When price is bullish, you want to see the balanced price range get cut through like butter, hot knife through butter. It's not giving us either right now, right? So when we look at where price is, we're just trading inside the lower half, the discount of the lower half. And what is it coming back to? It's coming back to fair value, right? So because if you look at the discount of the low, if you go from the equilibrium to the low, right, and you look at that as a full dealing range, that right there is equilibrium. That's fair value, right? We come down, that's the entire range. We go back to the high, back to fair value, back to the high, back to fair value, right? Slowly inching higher, but we keep coming back to fair value. What does that mean? Price is ranging. Whenever you go to a point, back to fair value. Go to a point, back to fair value. That's consolidation. That's ranging. That's engineering liquidity. We are still in the middle of the road. Remember, we had the whole higher time frame, and we said we were still in the middle of the road. When we look at the shorter time frame, where are we? In the middle of the road. Right? It's fractal. Stacks on stacks on stacks on stacks. Blocks on blocks on blocks on blocks. You feel me? All right? So, overall, from super high time frame, price is in a buy program. From the weekly time frame down to the daily, right, we are in a short-term sell program. Here, this is the area we talked about on the weekly on down, right? We're in a short-term sell program. We have stalled, right, in the discount of that short-term sale program. Okay, price is respecting the bullish order block right now. Right, it's respecting the bullish. We came down to an anticipatory reactionary point, that rejection block. Remember, we was looking at this right here as becoming a potential long-term low. Right, we're looking at this at. I'm sorry, it'll be like this. All right, that will be your long-term low because that right there would be your intermediate term low in the middle, right, with a higher intermediate term low to the left and a higher intermediate term low to the right, right? So that makes that a long-term low, right? So when we came over here and made this low and went back up, right, we said because that swing low exists, technically this was already a long-term low. But me personally, I'd like to see price go and engage the buy side before I start putting more belief, if you will, in that low. And now we've taken that buy side. So now we're saying, hey, there's your intermediate term low there. So that's your long-term low, right? So we're looking for that to stay in place. That's why I say we can still come down, take that low out, hit that, and that still leaves that intermediate term low in place and still go up. Okay, we're starting to formulate bullish signatures, right? But we're still inside a sell program, right? We're still inside the sell program, but as we go down in time frames, we're starting to see little by little small bullish signatures starting to show up. right? And this is the daily time frame here, okay? So looking at, that's the daily time frame. Now, right, we're just gonna drop down to 60-minute real quick for a minute, right? And then as we see here, price, once we came down, right, this is our bearish dealing range we was looking at, right? We came here, as we look here, once we made this low right there, price came back up. When we came back up to equilibrium, right, what do? We created a bullish dealing range right there. All right, let's look at it. Now this is on the intraday time frame, right? This is on the intraday time frame. So on the intraday time frame, right, price, when we came down to our anticipatory reactionary point, we came back up, right? Took out buy side liquidity here, right? Came back up to fair value, came back up to equilibrium, right? If we run from there, right, to there, that's the overall dealing range that we just created. Why? We took out sell side, we came up, we took out buy side, right? If we come here, what do we have here? That V-shaped recovery. That V-shaped recovery represents what? Trap traders down here, right? So we're looking at the latest expansion of our dealing range, right? As we traded up, we came down, came down to a discount, down to a fair value gap, down to an inversion fair gap value gap, traded up, made a higher high. What did we just do? We extended our bullish dealing range, right? So now there to there is the overall bullish dealing range that we're in. Where was price chilling at? In the middle of the road. Remember on the weekly time frame, where did we say we was at? In the middle of the road. Remember on the daily time frame, when we said inside that lower quadrant, that lower half, we were where? In the middle of the road. And where are we? Because that's the lower quadrant there. Remember, this was the up, this was the equilibrium, low in the lower quadrant, middle of the road, right? Range, right? We came here, it's a little bit higher, so we expanded it a little bit more, right? We extended a little bit more. So right now that's the highest high and lowest low inside our bullish dealing range, our bullish order flow that we created. Price on the intraday time frame created bullish order flow, right? After hitting down there, came back down, consolidating right there at equilibrium. All right, let me get some of this other stuff off there so we can just look at, let's hide that monthly wick, right? We're gonna hide our daily, this is our weekly / daily latest dealing range, the bearish dealing range that we're inside on the weekly and the daily, the short-term dealing range, right? I'm gonna hide that. And then on the intraday time frame, right, we've created a bullish dealing range, right? We're respecting bullish order flow on the intraday time frame, right? We come back down, right? We're hovering here around equilibrium, right? We came down to a discount, back to equilibrium, back down to a discount, back to equilibrium, to a slight premium, back to equilibrium, back to equilibrium, came up, manipulated out, buy side. Did we take out that high? Let me see. Let's see if we took out that high. God dog it, Tim. And we took out that high. So what did we just do? We extended the bullish dealing range one more time, right? Because we made a newer high. So we're still inside that bullish dealing range. Okay. Then now here we come back, right there, and right here we drop down, right? Take out that low, right? Don't take out that low, right? Come down, take out the weekly low, and then we rally back up, right? So when we're still hanging around, we're in a slight premium, but we're hanging around that equilibrium of this bullish dealing range. So on the intraday time frame, the overall let's just say the longer term intraday time frame, we're still inside a bullish dealing range. But for the short term, right? For the short term, we have been respecting bearish order flow right here, right? For the short term there, right? But we're still inside this bullish dealing range, and this bullish dealing range has not been invalidated, right? It has not been invalidated. When does this bullish dealing range here, I dog it, get out of here. When does this bullish dealing range become invalidated? Right? When we take out that low right there. Right? Once we take out that low right there, what have we done? We've extended the bearish dealing range of the overall of the higher time frame, right? The short-term bearishness, right? Until we trade out of there, this bullish dealing range has not been invalidated. Only thing we're doing is still engineering liquidity, right? We're engineering liquidity and slowly edging higher, right? Came above these highs, came above the high, came above the high, set relative equal highs, came all the way down to a deep discount here, manipulated sell side, traded above the highs, right? Traded above the highs, traded above the highs, right? Then we came all the way back down to a deep discount again, taking out the sell side. Now we came back up and looked like we just took out that high right there. Yep, just poked above that high right there. Okay, so now what are we watching to see if we continue up and edge up there? Why are we watching that? Because we came to the sell side of last week, and then we just traded up, right? Taking out all of this buy side right there, right? Took out the sell side from last week. And so now when we reject back up, take out that high, now we're looking for the possibility of trading to the opposite end of that range. Same thing we did here. We came down, took out the sell side, right? We took out the sell side of the previous day, right? Once we hit an anticipatory reactionary point, what did we do? We went back to the opposite end of that dealing range, right? Took out the low, went back to the high. Okay, now in this case, we pushed through the low and just wicked into the high. Okay, so the short-term sell program, right, is still looking pretty good. Why? Because we're just manipulating the highs. Okay, but you got to remember, we're still inside a buy program, right? And anytime we come to a discount, what happens? Price shoots back up, right? Price shoots back up. Every time we drop below lows, takes off. Below lows, takes off. Below lows, takes off. Below lows, takes off, right? So we maybe see how we slowly inching higher, right? But every time we get below lows, we taking off, right? So this buy program, this bullish dealing range still has not been invalidated. All right, makes sense. All right, makes sense. Okay, hopefully it does. Now we're back above the new week opening gap. Right, back above the new week opening gap. And what do we do here? Right, once we came down, remember, right, sell program, sell program, sell program, sell program, right? Short-term bullishness, right? Even shorter term intraday, we've created a new bullish dealing range. All right, remember, came here, right? All this right here, we're respecting bearish order flow. So now, right, when you look at where we are currently in price, right, when you go there, right, that's the highest high. and you come down, that's the lowest low. All right, so you got this bearish dealing range that's inside the range that the bullish dealing range that we in. This bearish dealing range brought us back down into a discount, right? Let's see how much of a discount it took us back to. Wrong one. Where's my? Oh my God. I'll just do it like this. Oh, I'm on the wrong one. That's why. I'm on the wrong freaking thing. I'm like, man, why ain't nothing popping up? Boom, came down, deep discount, right? Then move back up here, right? We opened up here, gap down into the low, right? Move back up into the bearish order block. During the Asian, we started to come back down, took out the weekly low again and the overnight low, traded back down to the lower quadrant. All right, we moved back up. Then at 9:30, we took off, right? Traded above there. All of that gave us a bullish breaking market structure, right? Once we got a bullish breaking market structure, right, price did not show a willingness to really want to get back below equilibrium for the remainder of the day, right? Then we open up here at 6 p.m., start to pull back right below that low, and now we're above the new week opening gap, right? So since we've come down, swept liquidity, right, got a bullish breaking market structure, now you're eyeballing the new week opening gap. It's below price, right? So now you're looking for the new week opening gap. Does it provide support, or do we melt through it to show a desire to want to keep going lower, right? At the present time, price has taken out a weekly low, is taking out a daily low, and showed signatures of wanting to go higher. It went back to the opposing side of the daily range, right? And now it's not showing a willingness to want to drop. So now you're looking from Monday, Tuesday, Wednesday, Thursday, Friday, if it continues to show a desire to want to trade back into the opposite end of the weekly range. Why? Because we've created a new bullish dealing range inside our bullish dealing range that we're trading inside after coming to a discount and respecting our intermediate term low down there. Right, and in the short term, right, in the short term we have, that's a low there, intermediate term low there, a short term low there, short term low there. So in the short term, right, that's an intermediate term low there, and then that's a consolidation, don't really care about it. But in the really short term, right, you can kind of make this into like a long-term low, but that's really trying to dig too much. But so right now, just watching that as the low that wants to stay protected. It stayed protected there. We have relative equal lows there. This is when the short-term bullishness that was created is invalidated. So watching, does this low from Tuesday the 17th stay intact, right? That's your intermediate term low. Does it stay intact? And or do we start to slip? Because right now, right, we're still chopping away in the middle of the road. See right there, when you can see it for yourself, this is the middle of the range, right? We're just chopping in the middle of the range, right? We go all the way up, pull it back down in the middle. Stood there, go all the way up, pull it back down in the middle. Drop down, pull it back up, right? Now we're tracing back down toward the middle, all right? What else can we look at? We have this huge liquidity void slash fair value gap, right? So we have 1, 2, 3 candles, right? Like these candles don't share price, right? We have 1, 2, 3 candles. These candles don't share price, but all of that is because of this huge liquidity void right there, right? So how can we look at this? We can look at this as one huge down move right here, right? One huge down move right there. But looking at that liquidity void there, we got this huge liquidity void, okay? So we came up, right? Offered buy side delivery. Just let's go with the bodies. Buy side delivery to there, right? Offered sell side delivery in that same range, right? Of the liquidity void. All right, let's look at it like this. Let's get all this other junk out of the way. Okay. So now, looking at our liquidity void from here. God dog it. Come on. From here to here. That's our liquidity void. All right. So looking at our liquidity void, right? We come up into the void, right? Offer buy side liquidity up to here, and then offer like price both ways there with a wick. We just got a wick right there, right? So we got some price action in there both ways, right? So now we offer complete sell side delivery in this same range there. So now we've come back inside our liquidity void, and we've offered like full body delivery on both sides of the spectrum, buy side and sell side, right? So then when we come back over here, as we trade back up, cut right through that, right? Cut right through that there, boom, right? Wick down into it, and then we lay a body, right, to the upside there and wick both ways, and then we come here, and then we drop a wick down here. So now we've traded both ways in this direction, buy side and sell side there, right? Offer buy side here, right? Then we trade in both direction here, buy side and sell side, and then we got buy side and sell side there, and then we leave that area right there with a full body. Okay, so now we had a lot of back and forth on this hourly time frame in this area. Okay, so now we've left that area, so now we've come back down, and now we're coming back down into the liquidity void here, right? So now you're watching here, right, to see if price wants to lay a body for this portion of price here, right? Because we laid a body, right? But here we only offered buy side delivery from this point up, right? So now you're watching to see if price wants to lay a body here, or if all of this back and forth, because we offered buy side and sell side here, buy side and sell side here, buy side and sell side here, right? We've done a lot of back and forth in this area right there. So it's very efficiently delivered, but we still don't have a full body laid across inside the liquidity void for the sell side delivery yet, right? So you want to see the new week opening gap act as support. Why? Because we created a new bullish dealing range here, right? We came down, took out liquidity, traded up, took out liquidity. Matter of fact, you see I had that marked out earlier when I was watching price, right? Took out liquidity, right? This is the highest high. This is the lowest low of the overall range, right? This is our latest expansion leg on this time frame right here. So now we're in, right? Right, that's our latest expansion leg right there in this time frame. So for the overall expansion leg, if we came back down to equilibrium, right, that would offer us a chance to lay a sell side body across that upper half. All right, there's also a buy side imbalance here, but it's inside of this balanced price range. So again, you would want to see price not digging too. It can wick in, but it's better or low resistance if we just touch it and get gone, or don't even revisit it. Okay. So again, right, that's our latest expansion leg in its bullish order flow. Right, we've come down into a discount PD rate, and we're respecting bullish order flow. All right, and then look at the difference of what we're doing. Okay, when we was coming down, right, we were moving, right, but once we came into this anticipatory reactionary point, we started moving up and didn't show no desire to want to keep going down. Right, traded through all of these premium PD arrays, right, all of these. Or remember, if you're in bearish order flow, up close candles should act as resistance, but we're pushing through all these up close candles, right? Bearish PD array created in a discount, you anticipate that it getting pushed through, right? Bearish liquidity void, we pushing through it. This bearish liquidity void is in a premium, push through this bearish premium PD array. All right, bullish order flow there, not showing a willingness to want to collapse. So now we see the things that you're looking at to see, hey, does it to continue to support price, right? And you got your invalidation points, right? This bullish dealing range, that's your invalidation point. You trade down below there, we've extended the bearish dealing range. All right, we trade back above here, we've extended the bullish dealing range. All right, we trade back above here, we invalidate the bearish dealing range. All right, invalidation point for bearish, invalidation point for bullish. Right, trade down there, extending the bearish, trade above here, extending the bullish. Anybody got anything for me? I'm kind of tired of talking now. And yes, it is Popeyes. Y'all do me a favor, man. Hit a like for the algorithm. If you're not subscribed to the channel, y'all know what to do. Hit subscribe and turn your notifications on.
Appreciate you, Tim.
Appreciate you, C-Walk. Shout out C-Walk, man. C-Walk been gang a long time. Who else I see up here been gang forever? Deborah been gang forever. Anna Day. Hit Learn and Share. Hit Learn and Share been gang from day one. Hit Learn and Share been gang since Instagram days. Hit Learn and Share been rocking since Instagram days. When I used to go live on I was jumping on Instagram. I used to have it jumping on Instagram. Hit Learn and Share been on here since Instagram. Somebody got a little, what's that little, that's like a little championship trophy that he put in there. I guess that's the emoji. All right. I don't see nothing in the chat, and I don't hear nobody saying nothing. I appreciate y'all. Gang. I apologize for not doing the y'all give it up for yourself for sticking around this long, man. Give it up for yourself for sticking around this long. Drop one of Clue's bombs for the gang. Drop one of Clue's bombs for everybody pulling up on YouTube that's not in the gang. Gang. I apologize for not doing the pre-market analysis today. You know what I'm saying? Had technical difficulties with the clock after the power went out yesterday, and but I'm gonna do a makeup day tomorrow. So we'll do a pre-market analysis tomorrow. Right? We typically don't do it on Tuesdays. It's typically pre-market analysis Monday, tape reading on Wednesday, and pre-market analysis on Friday. But since I didn't do the pre-market analysis today, we're going to do a makeup day tomorrow at 9. So I'll see y'all in the pre-market analysis channel tomorrow at 9. Remember, the pre-market analysis is not recorded. So pull up at 9. Be there or be square. If you want to be a part of the gang, second description in the link below. It's $50 a month. Apex, I think they got like a 85% off sale now. They got new plans they coming out with. I talked about that with the gang last night. I talked about like the new plans they got coming out. They said they're gonna be adding more stuff. Right now they just got like the core plans that's in place. They said they're going to be adding more stuff later, but right now they just got the core plans. Everything they talk about on that, it look good. It looked good to me. It's like everything is moved to like an automated process, and they said it's to eliminate payout denials. They said if you make it to a payout now, there's no such thing as a denial, because they got all this automated stuff in place to stop you from breaking rules. All right, the only thing they can't stop you from doing is like hedging, meaning you can't be long in one account and short in another account, or you know what I'm saying, long NQ and short ES. You can't hedge in between accounts, right? You can't do that. That's inside the, but no more MAE rule. If you don't know the MAE rule, that was like you couldn't have one position that went into drawdown more than 30% of your available drawdown or available limit, whatever's, you know what I'm saying, whatever it is, your cushion drawdown, whatever. You couldn't risk no more than 30%. So if you had like a $2,000 drawdown, you couldn't go into drawdown like $750. If you did, that's a violation of a rule. They'll send you an email and be like, hey, you broke the MAE rule. You got to trade for this many days before you can request these funds, yada yada yada, right? But to combat that, they got daily loss limits now for the PA accounts. So now if you got a $50,000 account, if you go into $1,000 in drawdown, it automatically shuts you off for the day, right? Now it doesn't blow the account, because for a $50,000 account, I think you still got a $2,000 drawdown, if I ain't mistaken. But it's a daily loss limit. So if you hit that 1,000, it locks you out for the rest of the day, just like many other platforms. Before, they didn't have daily loss limits on Apex. They've changed it to 5 trading days to request a payout now, right? Even though they changed it to 5 trading days, right? You have, for a 50K account, you got to make at least $250 a day for it to count as a trading day. Where in the past, where you had to make, I think, at least $150 a day for it to count as a trading day, and you had to trade for 8 days, and 5 of those 8 days had to be either that 150 or 200, whatever it was. I think it was like 150 or 200, right? Now they just eliminated those extra 3 days and raised up the amount, you know what I'm saying, just a little bit. But it really don't matter, because you got to get above the cushion. So for a 50K account, you got to get above 2,100 before you can request a payout. And in order to request a payout, I think you got to get to like 2,600 to be able to request a $500 payout, right? Because you can't go no lower than 2,100 on your, in a 50K account. You can't go no lower than 2,100. That's your cushion, right? So you got to get to 20. So if you do 5 straight days of 250, that ain't nothing but like 1,250. So you're not even above the what's the name anyway. So, you know, I don't know why people be complaining about, well, I got to make $250 for it to count as a trading day, right? You got to make $2,600 before you can even request anything. You know what I'm saying? So, but Yeah, 5 trading days. You can only get 6 payouts inside your PA account. And for the 50K, it's $1,500 for the first 2. It's $2,000 for the second 2. It's wait a minute. It's $1,500, $2,000, $2,500, $2,500, then $3,000. I think. I don't know. I'm gonna have to look at it. But you can only get 6 payouts, right? The old legacy stuff ain't nothing changed about that. You still got MAE. You still can request more than 6 payouts. It still will renew. The new evals don't renew. If it's a one-time payment, and if you don't pass it within 30 days, the account just closes. If you blow it, you might as well just buy a new one, because it's gonna disappear after 30 days. They said they trying to keep it to where this new core stuff, like they got rid of the real big one. So the 25, 50, 100, and 150, I think those the levels that they got. They said they trying to make it to where these are always on sale, anywhere from 80 to 90%. Right now they doing like an 85% sale. They said they trying to make it to where it's always on sale. And let me see here. Oh, you can pick between intraday. You can pick between intraday, trailing drawdown. You can pick between intraday, trailing drawdown, or end of day drawdown. Right? You can take your pick. Right? So you can pick between path to funding, end of day drawdown, or intraday trailing drawdown. Right? Everybody know what the intraday trailing drawdown is. Everybody know what the end of day drawdown is, right? Right now, the intraday, see there, I told you I had my what's name set for the wrong time, and now it's going off at 8 o'clock. That was supposed to be waking me up at 8 o'clock this morning. But my clock set wrong. I got to go in and set that. I'm glad it did that. So right now, with the 85% off sale, right? They having an 85% off sale right now, right? And with the 85% off sale, right? It's the same price. This not even right. This not even showing up right, because 85% off of 197 is like 20. It's like, oh yeah, $29.95. Okay, maybe it is. Oh, so it's a different price. That's what it is. It's a different price for this right here, because that say $19.97. No, because they should be the same price. And see, that's $29.95. See, that's 85% off. And then, oh, it's a different price. So for the intraday, it's showing that it's $131 for the intraday with that percentage off. What's 131 minus 85%? They different prices. Yeah, they different prices. 131.33 minus 85%. Yeah. So they different prices. See, when I was looking at it earlier, they was having like the same price in there. Okay, so this right here is right now is $19.70, and it's $79 for the activation fee, right? For the end of day, it's $29.95 because it's a little bit higher, and it's $99 for the activation fee for the end of day trailing drawdown. Okay, so the intraday trailing drawdown is a little bit cheaper. So it's right now it's $19.70 and $79 for the activation, and it's for 50K, and it's $29.55 and $99 for the activation. All right, and if you right, and then over here, that's the performance accounts. It show you here, right? That's your max drawdown, right? Oh, you got less contracts now, and it's a tier system where you don't get access to your full contracts. When you first come in, I think you only get 2 contracts on. Let's look at the scaling, right? Scaling, right? So here, right, with the 50K account, right, with the 50K account, when your P&L is between $0 and $1,500, you only get access to 2 contracts, and your daily your daily loss limit is 1,000. Between 1,500 and 3,000, you get access to 3 contracts. Daily loss limit 1,000, right? If your P&L get between 3,000 and 6,000, you get access to all 4 contracts, and then your daily loss limit is 2,000. And if you got your P&L is above 6,000, again you got access to all 4 of your contracts, and your daily loss limit is 3,000. So this is how they eliminated the MAE rule, right? By having a daily loss limit. So instead of denying you hit your daily loss limit, you should be locked out. Okay. And then let me see. Inactivity rule. They talk about you gotta trade at least 2 times a month, I think. And then after 2 times within a 30-day rolling period. And then, you know what I'm saying, after 15 days of inactivity. So you got to place at least 2 trades in a 30-day rolling period. End of day. Payouts. Right? 100% profit split. Right? Minimum trading days 5. Minimum payout $500. You got a 50% consistency rule now, meaning one day can't be larger than 50%. They used to be 30, right? A maximum of 6 payouts per performance account, right? Whereas before, after your 5th payout, it wasn't no limit on how much you can request out of the account, right? But now, right, with the 50K account, right, 5 trading days, got to be at least 250 per day to be a trading day. Your safety net is 52,100, and the minimum balance to request that first 500 is 52,600, right? So at 52,600 you can request 500. That'll bring you back down to 52,100, right? Of course, if you're above 52,600, you can request all the way back down to 52,100 if you want to. All right. It's 50% safety net minimum pay. Okay, here we go right here. Right. So for the 50K, your first payout 1,500, second payout 1,500, third payout 2,000, fourth payout 2,500, fifth payout 2,500, and then the 6th payout 3,000. All right. And then you say like, well, Tim, they used to let you get 100% up to $25,000, right? Yeah, they did. But now you only get 6 payouts. So now what does that mean? That means don't be trying to run the account up. You know what I'm saying? Don't be trying to run the account up. Just trade enough to get that max payout. All right. So if you let's do the math. Right, you don't want to be trying. You know, they gotta protect themselves. Don't be trying to go in there, cause you know people trying to go in there and run the account up, and take the max on 5 payouts, and then go in there and you know they just going balls to the wall, full contracts, and then once you get that 5th payout, it ain't no limit on what you can request, and so now they got $100,000 across 20 accounts that they can request a payout because they just going balls to the wall on with 15 contracts on every one. You see what I'm saying? So 52.1 plus 1,500, right? That's 53.6, right? So when you go into your first payout cycle, right, don't try to get no more than 3,600. Now you don't have to go and try to get 3,600 in 5 days. You don't have to do that, right? Take your time, right? You know, I got to get 3,600 so that I can request 1,500, and that'll bring me back down to my 52.1. Or you can be smart about it, right, and say that 52.6 is where I need to be able to request, period, right? So then you'd be like, okay, 52.6 plus 1,500, right? So for my first payout, I need to get $4,100, right? To get my first payout, to be able to take out 1,500 and leave me at the place where I can take another payout, even if I only make $250 a day for 5 days, because I'm above 52.6. All right. So 4,100 divided by, let's just say you're gonna take your time getting to the 41, right? Let's say you're gonna take 10 trading days divided by 10, right? That's $410 a day, right, to get to 4,100 and 10 trading days, right? So, you know, and that I ain't taking into account like losing nothing. We just talk about just the, you know, the math, right? So if you make $410 a day, right, not saying I'm not losing, but if you just clear $410 a day for 10 days, right, you'll have 4,100. Then you can request $1,500 minus $1,500, right? That leave you with 52.6, right? Now all you got to do is make $1,500 over 5 days, right? So 1,500 divided by 5, that's $300 a day, right? All you got to do is make $1,500 over them 5 days, right? And then boom, you request 1,500, right? So plus 1,500, right, equal and minus 1,500. You back down to, that's your second payout. And then now, right, with 2,000 divided by 5, now it's $400 a day. All right, make 400, clear $400 in a day, right? You can request $2,000, right? Instead of trying to run it up, you just trade the amount that you need to be able to take out your max, right? And then now they say you only get 6 payouts, and they have I don't know. They say they're not going to automatically put you into live, right? It's going to be case by case, probably the way you trade, whatever. But they probably just going to tell you, okay, now, you know, you can just start back over. You know what I'm saying? You can just, now, I don't really know that part of it. I'm assuming that PA account going to be done. If they don't put you in live, then you just got to start the process back over, I guess. Like go back through another eval and then go back through more PAs. I don't know how that part of it going to work, but you only get 6 payouts and then that's it, right? They either going to recommend you for live or not recommend you for live and say, hey, you got to start the process back over. You know what I'm saying? But if they recommend you for live, then I'm pretty sure it'll be just like every other time, where whatever the remaining balance is in your accounts, that's what you will start your live account with. Me personally, I don't want to be a live trader for anybody, because right now I pay $12 for my live data through NinjaTrader, and I pay $7 for live data through TradingView. But when you trade as a live trader for these prop firms, you got to pay like $300. Like, it's too much money for your data. You got to pay like $300 and some dollars, and I'm only paying $12 for it right now, and I'm a live trader. So why I got to go pay $300 something to split my profits with a company? Nah, you can say that. I don't want to trade live for you. I see this was at 7:46. Sam, are you still in here? I see you asked something a long time ago. You still in here, Sam? If Sam's still in here, I'll answer this. But if not, we're going to go ahead and call it. Sam asked something a long time ago. You there? Sam said, oh man, I see all kind of stuff I missed. But Sam said, if you had to pick one time frame to trade off, what would it be and why? Sam, I wouldn't pick one time frame to trade off of. That doesn't fit well with my trader identity. Right? Just picking one time frame to trade off of does not fit well with my trader identity. Now, is there anything wrong with picking one time frame to trade off of? No, it's not. Right? And if you're talking about trading for intraday, right, you want it to be either 15 or hour, right? If you're trading intraday time frames, if you had to pick one time frame to trade off of, you would want it to be a 15-minute time frame or an hourly time frame. And the reason why I say that is because the 15-minute and the hourly time frame is going to give you less fake outs than the 5-minute or below. Right? Anything under like the hourly time frame, it's not going to give you that many fake outs, but your risk to reward is usually going to be a higher risk to reward, meaning you're going to have larger stop losses. And Tim, why do you say you're going to have larger stop losses? Because with any PD array that you're using as your entry mechanism, you have a mandatory stop placement, right? And just for right now, we're just going to we're going to talk about fair value gaps. Right? That's the only thing we're going to talk. We're just going to talk about fair value gaps. We ain't talk about nothing else, right? So right here on this hourly time frame, okay, there's a bullish fair value gap right here. You say, hey, if price come back down to this bullish fair value gap, I'm going long. I hit the wrong tool, right? I'm going long at this bullish fair value gap here. Now, because it's a fair value gap, the mandatory place you have to put your stop based off the way that Michael teaches it for a bullish fair value gap is below the low of the first candle, right? Now, if by chance the second candle has a lower low, then it'll be that second candle. But most of the time with fair value gaps, the first candle is going to have like either the lower low or the higher low, a higher high. Okay, so that's your mandatory stop for a fair value gap. So now looking at that, and then now if you want to just say I want to shoot for at least a 2-to-1, right? Now you see that's the size of your risk to reward. You're risking 209.25 points to make 418.5, right? So it's like a larger place to put your stop, right? And then if you go down to the 15-minute time frame, right? In this case, the 15-minute would be yielding you pretty much the same thing, right? Because it's pretty much the same based off this a little bit. And in this case, the second candle has a, you know what I'm saying, it has the lower low there. So it's, you know, pretty much the same trade, right? It's pretty much the same trade because the size of the fair value gap in this case, right? But you have a mandatory place where you have to put your stop. And like looking at this right here, right? If you had the ability to hold over the break, you would still be in this trade right here, because that candle there at 10 a.m. that would have picked you up on the trade. That candle would have picked you up. It would have gone all the way up here, and now it's sitting up here doing around, right? And still has not hit your target. Okay, if you just did a basic 2-to-1. All right, so you have a mandatory, you got a mandatory stop placement for all PD arrays that you choose to trade off of. So the higher the time frame you go up, typically the larger the PD array is going, the stop is going to be, because the higher time frames, price tends to expand a lot further on the higher time frames. Okay, but you're going to get less fake outs the higher you go. You know what I'm saying? For intraday trading, like for the hourly time frame, for the 15-minute time frame. But then when you get down inside like the 5-minute time frame and the 1-minute time frame, now you're getting to the point where the higher time frame may need to come back down here, and then you will get a full breaking structure on the 5-minute, right? Just say if you was trying to trade off of this right here, because you say, okay, we came down, took out liquidity, we went up, took out liquidity, so I'm looking at this right here as a bullish dealing range, and I want to trade off of this fair value gap. Right now the hourly got a reason to come down here, so you can get a full bearish breaking market structure on this 5-minute, right, and price still go back up, right? So you can get a fake out here. You got more chances to get fake outs on a lower time frame. So personally, I wouldn't look for one time frame to trade, because it doesn't fit my trader identity, right? But if you do pick one time frame, I would say you want it to be at least 15 minutes or an hour. Anybody got anything else? All righty, that food out there smelling good, so I'm about to go eat. Even if you got something else, keep it to yourself, cause I'm hungry. Gang gang, I'll see y'all in the pre-market analysis channel tomorrow at 9-ish. And everybody else, I'll see you tomorrow night at 6 for the price action recap. You know what? I probably should have been recording this on my computer so that I could chop these segments up to upload it, because now I got to wait for it to post, then I got to download it, then we ain't gonna get no chopped up segments from tonight. We ain't getting it. From now on, I'm gonna record it so that I can just put it in my editor and chop up the segments that I want to chop up. We ain't getting no chopped up segments from tonight. All right, man. If this is your first time tuning in, I want to say thank you. If it's not your first time tuning in, I still want to say thank you. If you're not subscribed, please subscribe. Hit the like button for the algorithm. And until the next time I decide to get on Algo's internet and share my thoughts on this thing that they call price action. My name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. You see it behind me. You see it on my shirt. That just mean big spot if you know hablo español. Y'all be safe out here in these trading streets, man. Gone. Yeah.